Welcome back to Firmer Ground from SRM, where we explore trends and strategies impacting the current and future state of financial institutions in North America and across the globe. My name is Neil Doherty, host of today's podcast and Managing Director of Global Marketing at SRM. Every episode features perspectives from the world of banking and financial services, including thought leaders here at SRM, executives at future-thinking financial institutions, and other experts from all corners of the industry. In this episode, I speak with Dean Nolan, SRM's Managing Director of Commercial Payments. Dean brings 25 plus years of experience in payments and financial services to SRM, having held leadership positions in payments strategy, innovation, product management, and product sales at Fifth Third Bank, Bank of America, Wells Fargo, First Data, and MasterCard. He's a frequent speaker on instant payments and Fintech, and also API workgroup chair at the U.S. Faster Payments Council. The topic today is commercial payments and specifically what headwinds in 2024 are transforming the landscape. This includes the impact of fraud, instant payments infrastructure upgrades, and overall transformation initiatives. Please enjoy the conversation and let us know what topics you'd like to hear about on the podcast. Okay, well, hi everyone. Neil Doherty here, Managing Director of Global Marketing at SRM, and my guest today in the studio is Dean Nolan. And Dean is our Managing Director of Commercial Payments at SRM. He's based in Charlotte, North Carolina, and absolutely an influencer in the payments industry. So really excited to talk to him, and specifically when it comes to the importance and evolution of instant and faster payments. So he's going to give us some information on that today. I'm sure we'll get into that at a fairly deep level. And I'm super excited to speak to him because I want to learn a little bit about some of the big trends that are happening in commercial payments, things that are popping up this year, and how SRM services can assist FIs in making the most of their payment strategy and investments. We want to share that with you today as well. So welcome, Dean. How are you doing?
Hey, I'm doing great, Neil, and thanks for having me on. Just for some quick background, I'm the managing director, as you mentioned, of our payment within our payments practice, focusing on commercial payments. And there's just so much going on in that space right now, and such an exciting opportunity area for our clients. Really excited to be talking with you about it today.
Yeah, thank you. This is probably a conversation that's a bit overdue, as I know you've been with us since, what was it, kind of late summer, early fall of 2023. Is that right?
Definitely. Yeah, it was going right into conference season. So
there you go.
That's probably why we didn't see each other. I was on the road a lot.
Well, yeah, I know. At least we're in the same time zone, right? That always helps. So, let's just get into it. The first question I had for you today is I was hoping you could just lay the groundwork a little bit for our listeners in terms of the SRM commercial payments practice and what you're able to provide to the clients that you're working with in the industry. So thinking about services and products and just kind of the overall approach you take to the work that you do. I'm really curious about that.
Yeah, well, thanks. As you mentioned, I've been here since early fall, and really from an SRM perspective, we set up the commercial payments practice because we thought there were some really good opportunities for our customers in the commercial payment space, and that commercial payments themselves were frankly, one of the bright spots to drive margin right now, given some of the broader headwinds in the market. Stepping back a little bit, despite the economy stock market doing well and things like that, there's still a lot of macroeconomic uncertainty out there. We see a fairly conservative approach happening within financial institutions. And I even heard some of them reference it as having this survive until 25 mentality.
Yeah, we've heard that directly from our clients. So it's interesting that you bring that up.
Yeah, it's really fascinating. It's really interesting seeing what's happening out there. And then you've also got this growing regulatory presence, really kind of impacting the payments ecosystem, pulling a lot of revenue streams away from the banks. And then really on the commercial side, you got this spread margin pressures happening where the cost of funds and the change in rates have happened long enough where now they're having to pay more to compete for those deposits, and the loan rates are coming up, and then you see those spreads coming down. So when you put all that stuff together, there's a lot of pressure on banks from an economic perspective. Well, commercial payments volumes are one of the bright spots, right? They're expected to grow at a 14% CAGR over the next 5 years. And there's a lot of things happening in that space and opportunities that are happening in that space, which really create a potential for our clients to deliver better margins and do better and provide better performance for the bank by focusing on their efforts in the commercial payment space.
No, that's great. And I know that we'll, ultimately dig into, some of the tech elements of that. I know you're very close to that. But just kind of curious, when you think about the ways that you can kind of help customers, is there? I think you've mentioned before things like strategy around products and
Yeah.
efficiencies. Is there anything that is worth kind of expanding on there?
Yeah, great question. I think there's five areas where we've been, having a lot of focus and conversations with folks. The first one I'll call just generally technology. Right, there's so much changing in the
Right.
technology space and the transformation that's happening. Whether that be looking to take an in-house platform, like for example, operating or generating ACH payments out of your core and moving that to a dedicated platform, or bringing agent card programs in-house. Starting at that level, we've also seen those same technology discussions, expand themselves into API capabilities and even AI, right? And then kind of coming down a level, numerous discussions around product strategy. This could be roadmaps to successfully implement new solutions, to monetize and implement instant payments. I think that's been a really big discussion area with folks because there's just so much excitement around FedNow and RTP and moving forward with instant payments, but there needs to be some strategies packed around that in order to make sure that that's done in a way that monetizes that investment. So we're talking to folks there. On the operational efficiency side, in some cases, is using those technologies to help the financial institution themselves run more effectively. Other cases, it's really rolling out new solutions for customers, and helping, as you're talking about instant payments there, preparing yourself for that 24/7 operational support environment on the commercial side of the house. Frankly, not new on the consumer side, but something that relatively new on the commercial side. And
Right.
then the other quick things, just customer engagement, go-to-market programs, and then I'd be remiss not talking about strategic sourcing. Really leveraging all the things that SRM does well in terms of RFP creation and management, as well as contract negotiation, and being able to drive value for our customers on that front. So those are the areas where we've really focused. And really, we're having a lot of good conversations on all of them.
That's great. And I appreciate you summarizing that for us. I think it's, from my chair, obviously, it's very exciting what we've been able to do to expand our offering to our client base over the last few years, and having you on board and having this perspective on, commercial payments, and specifically being able to break it down into these kind of, pillars and areas of expertise and certainly support is it's just really exciting in general. So again, this kind of goes back to the fact that we're probably a little bit overdue to talk about this in general. So no, I think that's a good start and a great summary. So hopefully that'll help folks in terms of just kind of understanding, what your teammates can do when that conversation comes up. But I think, and maybe you've hit on a few things already, but if I can just kind of go a little bit further in terms of thinking about the commercial payments market. It's April 2024. As you mentioned, there's some, economic headwinds that we inherited from 2023, some tweaks, some changes here and there. But I was really hoping you could just kind of lay out in your perspective, or from your perspective, what do you see as the biggest challenges and also opportunities for financial institutions, and just the kind of the market in general when it comes to commercial payments?
Definitely. And the market itself is probably as dynamic as I've seen it in the 25 plus years I've been in the payment space. There's a lot of things in play, but I tend to look at probably four or five trends that are really driving, frankly, both the opportunities and the challenges. The first one, as you mentioned, those macroeconomic activities. There's a lot of carryover from 2023. That higher for longer rates environment is causing some margin pressures in products like commercial cards and things like that. But also, there's some new items falling in there. The geopolitical tensions that are happening with some of the wars or conflicts that are happening around the world. And then we've got a U.S. presidential election, which itself is interesting. Historically, if you look back, the market performance, for example, really doesn't change much depending on which party's in power. However, there is a time of transition that occurs, and shifts in portfolios, and there's a lot that's going to happen depending on what, the outcome of this election could make some significant changes. And then there's also the whole, I don't know how to call it, the divisiveness maybe within the country, and just seeing how that plays out in the election. So that's also throwing something into this uncertainty bundle.
Mm-hmm.
If I move beyond that and just really get into very specific things to the commercial payments market, the ones that stand out, first of all, It's going to be new payments. Um, I go back 10 years or so, and if you look at the options for B2B payments at that time, they were primarily cash, check, purchasing cards, ACH, and wires. Um, since then, there's been an explosion of new offerings. Same day ACH, that itself is less than 10 years old. The RTP network for instant payments. You have Visa and MasterCard with their OCT payment solutions, and you have virtual cards and cryptocurrency. And then, as of last July, we've got a new government rail for instant payments in FedNow. And, the first new government payment rail in 50 years. Um, each one of those new payment solutions brings with it a new value proposition, a new set of features and characteristics that then can be applied to end products to help customers, help our financial institution clients better support their customers, and then help their customers better support their customers. Kind of confusing there, but it's the banks to the corporate customers right. To their clients and products is what I was trying to say there.
For sure.
And the result is a lot more options for our commercial customers. There's the opportunity. The flip side of it and the challenge is a lot more solutions that have to be supported. So you've got both aspects.
Well, let me jump in here for a quick second, if I can, Dean, and just ask you. You mentioned FedNow, and I mean, just kind of maybe for not so much the uninitiated, but maybe for the folks that aren't following this on a day-to-day basis, what have you seen so far in terms of adoption and kind of the way that that's been moving forward?
Oh, yeah. It's actually really spearheaded the industry. So, the RTP network has been in place since 2017. It was having some really steady growth. When the government announced they were going to launch FedNow and then everything leading up to FedNow, there was a lot of industry awareness that was created, a lot of just overall promotion of instant payments. So when that network launched, it really supercharged the entire industry. Since then, we've seen FedNow grow to over 600 financial institutions, which is remarkable given the product's only about 7 months old. You look over to the clearinghouse. We've seen them grow to 500 institutions. They're processing close to 1 million payments a day now. So you're really just seeing this overall energy around around instant payments that is, it's excellent to see. And it's driving some new use cases as well, which we can get into in a little bit.
That's great. Sorry, I didn't mean to interrupt you, but I was curious whether you had a perspective on that and if you could shed a little light on it. I think you did. So that's awesome. So please continue. I know, again, we were talking about, I think you said you had, 3 or 4 things that you really wanted to cover. So I'll let you get back to it.
Yeah. And, I'd say the next one on the list, going after the new payment types is really the technologies. And I hit on it a little bit up front, but the digital payments, the mobile, the open banking, APIs, AI, payment hubs, orchestration, you name it. There's just so much there. And from an opportunities perspective, these are creating opportunities for banks to leverage these technologies to drive efficiencies in their own products and offerings. Opportunities for banks and credit unions to create new payment solutions that better serve their customers' needs. You also have the opportunities now for fintechs and payment providers to use those same technologies to disintermediate the banks, right? And then kind of even putting those two pieces together, you have the opportunities now for the banks to either use those fintech and payment provider developed solutions as part of their broader product set. And even some banks getting into the broader bank as a service environment where they're providing banking capabilities to help foster those fintech solutions. So all of this technology is really, really shaking up the industry. And what it's really getting down to from a bank and financial institution perspective is really the need for a blueprint, the need for a roadmap to understand how they want to play in this space and what's going to make the most sense for their corporate strategies as well as for their customers' needs. So that was the third area. I'm going to hit the other two just really quick. The fourth one is it's really consumerization of the marketplace. And this one, there's a lot of details around it, but just to summarize it, you and I are consumers, and right, we do payment products, and we know how those payments work. They're integrated into our Apple wallets or our Google wallets, and you've got that integrated commerce experience happening with Uber and with Amazon. Well, those environments haven't necessarily existed on the commercial payment side. However, the users of those environments are the same users in their jobs who are making commercial payments. So as a result, what you're seeing is all of those expectations that we're seeing on the consumer payment side are now transitioning over to the commercial payment side. And there's a need now for mobile payments, digitization, simplicity, personalization, instantaneous processing and transparency, API access. All of these things from the consumer world have really, really integrated over into the commercial world. And that's creating some exciting new solutions. Again, in that whole opportunities and challenges space, lots more opportunities to better serve customers. Challenges being the need to have the right technology, the need to have the right capabilities and solutions in place to deliver them to customers, because these are new things for the commercial side of the bank, and in some cases, new for the bank overall.
Right. I want to jump in real quick and just ask you maybe a follow-up question on this, because you're bringing up the idea of consumerization. You're mentioning the point, obviously, that there's been a lot of innovation when it comes to consumer payments, but in the commercial payment space, maybe it's taken a while to play catch up, right? And what I'm curious about is like, what's the kind of global perspective on that, right? So, I think we've heard for a long time that on the, kind of consumer payment side that, there were other areas of the world that were ahead of the US, right? In terms of in North America, right? In terms of adoption, and, some of that is based on our, whether it's about protecting competition or what have you, right? But we've seen that. Is the same true in terms of commercial payments? Have you seen kind of at a global level or in other areas of the world where they were moving towards this type of end game a little bit faster than we were? I assume that the answer is likely yes, but I wanted to ask that question. It just came up in my mind, trying to think about what we're talking about here and how it applied from a consumer standpoint. I was just curious about that.
Yeah, I think you are seeing that globally, and it's driven by just a different environment, right? In the global environment, right, there's much more regulatory or government intervention with open banking, right? So there's mandates that these things are happening, and which is then creating digital payments and moving things forward on all payment fronts more aggressively than you're seeing it in the U.S. Though the U.S. is catching up. And there's a lot of those technologies and a lot of those thoughts are coming to the US pretty quickly. So yeah, to answer your question there's some exciting things, interesting things happening globally, and we're seeing more and more of that come to the US.
Gotcha. And, just kind of going off the original question, any other kind of challenges that you see in the marketplace here?
The very last one, which I think in some people's minds is probably the first one, is around risk management. All the stuff we're talking about, all these new things are opening up new fraud vectors, new places where there needs to be expertise applied to manage those risks, to mitigate the fraud, to prevent the fraud from happening, and we just can't underestimate how these same technologies are also being used by the fraudsters. A great example of this, or maybe I shouldn't say a great example, but an example of this, because I wouldn't consider the outcome great. There's a story I saw from February from Hong Kong, where there was a finance worker who had gotten a corporate email phishing scam asking him to make a payment of $25 million. This individual suspected it might be fraudulent, followed all the company's procedures, inclusive of setting up a video call with the CFO and others from the company just to confirm that this was valid. Went ahead, made the payment. Well, it turned out it was fraudulent, and that the fraudsters had actually set up the video call with a bunch of deep fakes.
Wow.
Right. So
that's just wild.
It's crazy, right? And something that I agree with you. It's something you never thought of. So that's where, from a banking perspective, I'm not saying we're going to have deep fakes all over the place tomorrow, and then we have to protect on that. But what I'm saying is the evolution on the fraud side continues, and we need to continue on the financial institution side to evolve our practices, our procedures, and everything around that to prevent against these as much as possible. So whether it's new customer screening tools or real-time fraud and OFAC processes, some of them basic, moving from a Monday through Friday world to a 24/7 world, and tokenization and AI. There's so much that can be done and needs to be done, but it's this ever changing battle. So when you go back and say opportunities and challenges, there's a lot of opportunities and challenges from the new technologies and new payments and the consumerization. But then all of that, you need to take a look at this fraud lens too, because payments are involved, and anytime they are, the fraudsters are going to try to find ways to interject themselves into that payment value stream.
Right, and it seems pretty obvious too that there's a multiplier effect here, right, in terms of doing it on the commercial side versus at least the value, right, versus the consumer side. So there's probably a draw to that. I have to ask the question because if I didn't, somebody else would, right? So you've mentioned AI a few times here. I guess I'm maybe just curious in terms of that technology and how you've seen it inserted into the commercial payments space to date, even if it's just like a very kind of brief encapsulation of that. I mean, how is AI starting to be kind of inserted from a solution standpoint into some of the commercial payments, programs, technology, whatever that's out there right now? What have you seen so far?
Yeah, so like a lot of places, we've seen it historically on the fraud side. What I've started to see now is this moving into the automation side of it, and AR, AP automation. An excellent example of this is, there are providers out in the marketplace right now who are doing document scanning, and they're using AI to do this. So they're able to take those invoices and scan them in and turn the invoicing process into augmenting the payment with like this electronified invoice that creates straight through processing. And all of this is happening via AI to be able to interpret those invoices, pull the appropriate information across it, pass it on, integrate with the ERP systems on each side of this to make sure that these payments flow smoothly, and really create an end-to-end automated process. It's fascinating, in payments in general, but it really highlighted in the commercial payment space that nobody really has a problem with the actual movement of the money and the payment itself, right? It's the stuff that happens before the payment and the after the payment, which is where all of the pain points are.
Interesting. Yeah.
And that's where AI is coming to play right now to start streamlining those pay points, automate some things that are highly, highly manual processes. And this is important in commercial payments because a lot of the processes, especially on the reconciliation side, are manual.
Mm-hmm. And potentially outdated, I'm sure. Yeah, so that's interesting because you've got a bit of the risk that comes with AI, but also the fact that AI is actually, overseeing risk mitigation, right?
Yeah.
So it's an interesting kind of scenario there. So thank you for filling that in. I just figured I'd ask since, that's one of those things where in boardrooms everywhere, leadership is trying to figure out, okay, how do we apply AI for our use, right? Across, different functions and what have you. So appreciate you highlighting that. So, we talked about some things that are kind of big picture, and it's very easy to, kind of wax poetic, right, about all the things that are out there and things that, that FI should be thinking about, right? But, I often think that we do a very good job too of helping our customers think about, okay, like if I have to make a move tomorrow or next week or the next month, like what should I be thinking about? So I'm curious, when you think about things that are sort of actions that can be taken that would produce near-term value, things you're working on, day in and day out already with customers to try to get them, kind of moving in the right direction. Is there anything that comes to mind on that front?
Yeah, there's a couple of them that do. I think the first one is really these, what I'll call revenue and cost optimization programs, right? You have these higher interest rates as well as some other challenges that the institutions are facing where the margins in their products are under pressure. A great example of this is in commercial card. Digging into it a little bit, a typical or standard commercial card offering, 30-day statement period, 25 days to pay. Well, the cost of offering those funds to a customer from the beginning of 2023, before all the rate changes started, until today, has gone up probably 50 or 60 basis points. Right? When you step back and look at some of the deals that are out there in terms of the rebates that are being paid and the terms that are being offered, those 50 to 60 basis points of spend might actually end up eating up all the profit margin or a significant amount of the margin on those deals. When the perspective was that this was a short-term rate hike that would adjust itself over time, adjust itself relatively quickly, there was an opportunity to weather that storm. But now as it looks like this is lasting longer, there needs to be changes made, changes to go out to deal models and other things like that. So there's really this need to take a look at a commercial card portfolio. And one of the things that we've put together is kind of a health check. Well, we can go out there and just do a quick snapshot, a quick review of a commercial customer's card portfolio to try to understand where some of those pain points are and maybe offer some suggestions for ways to increase spend or decrease some of the expenses to offset those marginal rate decreases and help maintain the portfolio profitability. So that'd be one of them. Mm-hmm. A second one would be also in the short-term one, or one that's happening in the commercial card space as well, as around virtual cards. Commercial cards are in vogue with commercial customers due to the working capital benefits. Virtual cards really play into that consumerization perspective by making everything digital. They play into the risk management with all the controls they have on them. And financial institutions, who are trying to continue to serve their customers' needs in that market really need to ramp up their virtual card offerings with security features, interfaces, real-time controls, and everything. So there's opportunities there to come in on a product strategy level, take a look at what's happening with those programs, and start to refine some things around there.
And just let me ask a follow-up question on this too, Dean, if I could. Is there a natural connection to kind of going down this path and also kind of efficiency, cost savings? I mean, not needing to, reissue or reversion or all the kind of things that come with, more of a tangible item, or is this something that, is just kind of an outcome of COVID? I'm just curious, what sort of the catalyst for this was.
Yeah, so 100% there are efficiency savings, and those efficiency savings grow as you start to as processes become automated and technologies get utilized. A lot of the virtual card applications today are all email based. So there's a process of sending that virtual card number to the customer, who's then going to then pull it out of an email and use it to facilitate the payment. Evolution of APIs is starting to make that integrated, make that process seamless. So now you can drive additional efficiencies there as well. So I think there's a lot that plays into this. And then if you go back to what I was talking about before about some of that AP and AR automation and being able to create that straight through processing, well, that straight through processing tied to an integrated virtual card, you can really get the payment, the reconciliation, the invoicing, all to be very automated within one single loop of a process and kind of take the human beings out of that equation. And that last piece, Neil, is really interesting. That was an area too I found very interesting in the space. In looking at some of the data points that are out there, from an accounts receivable perspective, a lot of companies right now are seeing a slowdown on those payments coming in as their customers are experiencing the environment that's out there and just taking a little bit longer to make those payments. Well, those same exact entities now are also seeing a slowdown in the payments being posted to their GL accounts and posted because the individuals that they need to do the manual processes, they can't hire them, right? So you've got a staffing shortage of posting the data. You've got slow money coming in from your customers. It's like a two times effect. So this automation can really start to streamline a lot of that and help resolve problems that are happening all over the place.
No, that's interesting. I like how you kind of tied some of the things we already talked together about, previously to that scenario. What else? I mean, in terms of kind of the near-term value, are you working with?
Yeah, well, I think the last one is really around instant payments in those three. And with instant payments, as I mentioned before, and as we talked about with the launch of FedNow, right? FedNow helped usher in this new era of instant payments in the US. And with that, there's use cases, those early adopter use cases, the wallet unloads, the same day payroll, those are becoming de facto standards in their specific verticals and industries. And it's happening quickly. So, as an example, with wallet unloads and very specifically in the gaming sector, the market saw that industry and that process go from proof of concept to table stakes, no pun intended there,
Right.
in 18 months. Right? So as financial institutions are taking a look at instant payments, they need to start figuring out their strategies, identifying when they're going to get in the game, how they're going to get in the game, what particular components of instant payments they're going to get into. And those are decisions that need to be made now. Even though it might be a couple year strategy, which starts off with receiving payments today and sending payments in the future, they need to start moving on that today to make sure that they're in a good position for the next vertical, for the next industry that comes along, because they are coming along and they are continuing to be tested and growing. So that's the third place where we're having discussions, and is really about that readiness around instant payments, making sure those financial institutions are ready for them, helping them down the path of picking the right partner and going through that whole sourcing exercise, setting up a strategy to not just implement, but also to monetize it. Right? Nobody wants to launch these and not be able to drive an ROI. They just need to do that in today's environment. So there's a lot of work happening in that space as well.
Right, and I think that there's an element of that goes back to the comment earlier about the fear of kind of disintermediation, right, and trying to be a continued part of the process. And I think you've covered a few of these things, but if I had to summarize, kind of the ideas around future proofing, what would you say there in terms of like kind of the two key things that you think are critical for that sort of future proof and preparedness?
Yeah, it's a great question. I'd put the two of them. I'd put would one to really have that blueprint and the strategy and the roadmap in place, so that, because there's a lot of moving parts. We talked about all of the different payment types and how to manage those. You can just imagine if you're a institution that's offering 10 different payment types, and now you're trying to manage fraud or risk management across those 10. Well, the last thing you want to have is 10 siloed processes. Right? You want to start consolidating and shared services.
Right.
So there's the whole strategy and business drivers, so that you're understanding what corporate objectives as well as customer needs in terms of what that future needs to look like. And then associated with that is really the technology, the payments transformation plan itself and execution of it. That can start with FedNow and RTP. One of the good things about instant payments, again, going back to your opportunities and challenges being two sides of the same coin, most financial institutions don't have a platform in-house that's capable of processing instant payments, so they need to bring a new one in. One of is the way the technology and the payment hub environment has evolved. One way to bring that in is to bring in a foundational cross-platform payment hub, if you would, architecture with the FedNow module or the RTP module on it, allowing the institution to solve that instant payments need, but also put in place a foundational element to start modernizing other aspects of their program. So it's that strategy plus then the execution of the technology being the 2 points. And there's a lot more examples in each of those I could go into, but just for brevity, technology, the strategy roadmap where you want to go, and then the technology and starting to execute that technology to make it happen.
And let me ask a follow-up question on that. Just from your kind of understanding and opinion, do you feel that the financial institutions are kind of staffed to do this sort of work, or at least to have like a project sponsor with this mindset today? Or is that something that you think will also be part of kind of the transition in the days, weeks, months, years ahead?
I think there's actually two questions in that one. So
Right.
from the mindset perspective, I think the financial institutions have the mindset to do this. I think they know a lot of the things that they need to do. And some of the value that we can add is just kind of sharing our expertise in it to validate those mindsets that they have. And then as well as to expand upon that mindset in maybe areas they hadn't thought about. So that would be half the answer. You also asked about the staff to do it. And
Right.
that's probably where the challenge is. I would say from the financial institutions that I've talked to, one of their, if not their most top precious resource is time. They just don't have that much of it. So
Right.
being able to lean into SRM and the expertise we have to solve the time side of that and do some of these analyses and develop the strategies and drive forward the strategic sourcing, things that they want to do, but maybe just don't have the bandwidth to take on themselves.
Yeah, and I asked that question because other folks that I've talked to that have come on the podcast as well, we've talked about kind of the battle for talent, and is talent moving in that direction in terms of working in the space, and obviously talent is certainly moving towards areas like AI, and tech is always going to have its fair share, but it seems like that's there's always that dynamic, right, of having the right kind of in-house talent as well as the right support from a an advisory service, a consultant like ourselves. So I was just curious, what your experience had been in recent months in terms of that.
Yeah, with that lens too, Neil, the other thing I'd throw out there is, from a broader industry perspective in the talent, AI, tech, APIs, open, banking as a service, there's a lot of industry talent going towards those technologies.
Mm-hmm.
And commercial payments, because so much of commercial payments is still manual, because the lack of commercial payments don't necessarily have those consumerization type features we talked about.
Right.
There's a lot of opportunity in this space. So just by nature of the opportunity, you're seeing the talent go to the technology and the technology go to the opportunity. So by the nature of that, the talent's going to the opportunity. Does that make sense?
Right. It does make sense. Yeah. And I think that's what I was hoping to express, which is just that it may, take a little bit more time on the commercial side, but, once that opportunity is embraced, once it's prioritized, I would imagine that you'll see, a lot of the talent that's already solved problems in the consumer space, really applying itself to the commercial space. So appreciate your insights on that. And I think we've covered off on a lot of really interesting things. As always, we try to keep this succinct for our listeners. So I wanted to kind of see if we can do like a quick wrap up, right? So, of all the things we've talked about, right? Like, I'm just curious, are there kind of 2 or 3 things that you and your team members can step in and help to accelerate initiative for an FI, for someone that you're working with, at this point? I know you mentioned something around, some kind of health checks and assessments. So help me just kind of recap that, right? If you would leave us with 2 or 3 things, what would it be?
Yeah, 3 things I'd leave you with is from a commercial card perspective, reach out to us. We talk about doing a commercial card health check where we can take a look at some of those key KPIs, some of the things happening within a portfolio, compare it to industry level, and help identify opportunities to improve margins and really adjust to what's happening in the marketplace. Second is a readiness assessment around instant payments. Instant payments is more than just the technology. There's also operational and strategic changes that have to happen. I know a lot of financial institutions right now are thinking about how they go forward with that. Some have actually gone forward and launched themselves, put themselves in a position to receive instant payments, but maybe they don't have all the right operational and strategic elements in place to be doing that the most effective way for their customers. So that would be the second thing. And then the third thing is really those strategies and roadmaps for the technology transformation and risk management. Those are long plays. There's a lot that's happening there. But at the same, even though they're long plays, there's efforts that need to be happening today because those environments, whether it's technology side or risk management, are evolving rapidly. So financial institutions need a strategy, need a game plan, need to start putting some things in place. So commercial card health checks, instant payments readiness assessment, and strategies and roadmaps around technology and risk management. Those would be the 3.
Awesome. No, that's great. And I think, maybe before we kind of close out our conversation today, I want to impress upon the listeners that, you are very close to all of the kind of innovation that's happening in this space. Can you maybe just tell us a little bit more about your involvement with the U.S. Faster Payments Council? I know there's a lot of things happening there. Maybe just kind of a little bit about sort of their charter and how you've been involved, because I think that, again, helps people understand that you're very close to, the kind of cutting edge of some of the things that are happening in this space.
Yeah, well, I appreciate you bringing that up. And yeah, the Faster Payments Council is doing some great work there. I just got back from their latest member meeting where I think we had close to 200 people in attendance, which is excellent. I currently serve on the board advisory group, which is providing input into organizational leadership on key topics and places to focus. I'm also just wrapping up a 2-year chairpersonship on the Instant Payments API work group, where we produced a white paper highlighting some of the best practices that providers of instant payments should incorporate when they're developing APIs. Also put together a great infographic on that, both of them available through the Faster Payments Council's website.
That's great.
Congrats
on that.
Yep. And then definitely. And then the other piece is, I'm currently working with leadership there to stand up a new work group in the B2B space. More to come on that as we get that finalized. So, anybody who's interested, go out to the U.S. Faster Payments Council website, get involved, or reach out to me directly. Would love to talk to you about it. I'm pretty active on LinkedIn talking about these topics as well.
Yeah, and I was going to mention that. I think I'd encourage anyone who's interested in more, like learning more about Dean's work, SRM's commercial payments expertise, our instant payment expertise, to reach out directly to Dean on LinkedIn. I think that's probably the fastest way to connect with you, and pretty much the way that we're all doing it these days. And certainly I would look forward to having a follow-up conversation, have you back on the podcast soon. I think we talked through some really interesting topics. I'll be interested to see, how some of these things start to, play out for the institutions that you're working with, and obviously how the economic conditions, change the situation as well. But I think there's a lot here to kind of sift through, and I appreciate that you were able to kind of summarize those, kind of main 3 things to be thinking about here in 2024. So hopefully we'll have you back soon. Really appreciate you having us, kind of work through this, and for you coming on and talking through it a little bit. And just be sure to reach out to Dean if you have questions. He's on LinkedIn, Dean Nolan. And Dean, thank you for joining us. I appreciate it.
Neil, thanks for the time. And I really appreciate the audience members who are listening to this. Reach out on LinkedIn. I'll also be at Nacha Payments in May if anybody's going to be there. So track me down there. Would love to talk with you. And thanks for all the time today.
Awesome. Thanks so much. Appreciate it. And we'll talk to you soon. Thanks for listening to Firmer Ground from SRM. Please stay tuned for more new podcasts in 2024 featuring guests from across the globe. Until then, you can visit us at srmcorp.com or on LinkedIn and Twitter.